exactly. Well, we've got the construction of permanent product, which, let's say you own your own lot. We're going to close on your construction portion of the loan as well as your permanent financing portion of the loan all at one time. So that way you're not coming back and doing two closings. Some of the products do require for you to do two closings, but for the majority of them, we can just do it all in one. You get a year to build your house. Okay, so we don't know what your rates are going to be until the home is completed. So I can tell you what the rates are today, but that doesn't necessarily mean that's what your permanent financing rate's going to be. So what we do is you have your construction loan rate. When you get close to completing your home, we're going to guarantee you a ceiling. Currently it's at 6.5%. So let's say you're starting your construction. We're going to guarantee you that your permanent financing rate's not above 6.5%. That way when a year comes by, and let's say the rates are at 8%, you have 6.5. If they're at 4, you'll get 4. So you get kind of the best of both worlds. So you have a 6.5% current ceiling right now, to where when you're done, you at least have that notion that it's not going to be above this amount.